Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, June 25th, 2010. This morning we're talking about be careful what you wish for. Now, overnight, in a surprise move, the United States Congress unexpectedly came to a deal, and they've agreed to a bill on financial regulation and reform. Right now, the uncertainty surrounding this bill has been weighing on the market for some time, as it was unclear what the outcome was going to be. Now, anytime you have uncertainty in the markets, that always brings about volatility. So, as news begins to trickle out of this 2,000-page bill and what it actually means for the banks in general, at least the uncertainty has been removed, and now everybody's going to be able to move forward. But what my experience tells me is that even regarding this regulation, Wall Street's been prepared for just about any scenario that could come out of this. And at the end of the day, it's not Wall Street that's going to be hurt by this. It's going to be the consumer, because all Wall Street's going to do is they're going to devise ways to get around the regulation, and then they're going to pass through additional costs to the consumer. So you're going to see, bank fees go up and things of that nature. So, we always say be careful what you wish for, because there's a lot of unintended consequences out there. When you have politicians trying to regulate, matters that most of them have no idea how they work. So we're going to have to see how this plays out. But legislation has been agreed to, and it looks like the president's going to sign it at some point next week. So this comes ahead of this weekend's G20 meeting, and the U.S. is probably going to go ahead now and try and push other nations for financial reform similar. But I'm guessing this is going to be a case of good luck with that, because regulatory environments are always seen as anti-business. Now, whether that's the case or not, more regulation usually means less business, and that's an unfortunate byproduct of the way things are. But the U.S. is hoping that everybody else is going to get on board and make regulation like this as well, so that they don't lose a competitive advantage. And I doubt we're going to see that. So anyway, U.S. also came out with economic data this morning. GDP figures grew at 2.7%. The expectation was 3%. Personal consumption figures came in at 3%. Versus an expectation of 3.5%. Right, now, this falls in line with what we heard out of Bernanke at the FOMC meeting on Wednesday, that we are having growth, but just that it's moderate. Okay, overnight in Japan, CPI figures came out at negative 0.9% versus an expectation of negative 1.1%, showing signs that deflation in Japan may be subsiding. So the market started off in risk aversion mode, and it looks like this may be reversing a little bit, but we're going to have to wait and see. All right, so we'll just take a quick peek at some of the currencies around the globe. Let's look here at the Kiwi dollar. We've got the Kiwi was lower. They had their trade surplus figures came in overnight. It does show a growth from the previous month, 814 million Kiwi. But the expectation was for 850 million. Now, what we've got here is you can see that the Kiwi sold off. This was on risk aversion, but it looked like it was flipping around this morning. And we get a nice little doji here at the bottom of this Bollinger Band, which showed this little move up. So if you're an intraday trader, these are the kind of moves you should be looking for. Okay, the euro is also lower. Increased, fears of this debt crisis have just been looming. This is the fourth day in a row European stocks have been down, and the euro has been trading a little bit positively correlated with European stock markets. The pound is actually a little bit higher. This weekend at the G20, we're going to get the big showdown here. It's basically going to be the UK's policy of tax and axe, that strategy, versus the US strategy of spend, extend, and pretend. So, right now the market's voting, and they're saying, hey, you know what the UK is looking at is actually better. I mean, you hear in the US that, we're going to fall into double dip recession if we don't keep spending. But you got to remember that government spending is the most inefficient use of capital out there. For every dollar that they spend, something like 40 or 50 cents actually makes it to the real economy. And then, of course, somebody has to pay that back at the full dollar. All right, there are no free lunches in life, and yes, we're in a crisis. Yes, there are a lot of people unemployed, but at some point people have to make personal sacrifice, and nobody's appeared to do it. So, the U.S. is just, we have to get elected next time, so let's just keep spending money. Let's kick the can down the road, and let's hope somebody else is going to be willing to pay for it. I don't think that's going to happen. So let's take a quick last look here Dollar Japan, we're on a 15-minute chart here. You can see dollars weak versus yen. All right, the CPI figures in Japan showed that deflation may be subsiding a bit. The minutes from the rate policy meeting, the last one they had, actually showed some members were concerned about inflation. So, that's a good sign. Now, the Nikkei was down overnight, but there's speculation that the G20 is not going to come to a consensus over any of global economic policies. So that's sort of strengthened the demand for the safe haven aspects of the yen. So, as we say, this regulation, it's been expected for some time, and listen, I'm not anti-regulation. I believe that good regulation is needed, but when you have congressmen and women who God love them, they're all not experts in economic policy. They're all experts in, politics and getting themselves elected and looking like nice people. And unfortunately, that sometimes leaves unintended consequences in the wake. All right. Basically, Wall Street is probably, uncorking the champagne this morning as we speak, because their worst fears haven't been realized. Okay, and while this isn't a home run for Wall Street, they've already figured out how they're going to get around these scenarios, how they're going to pass the cost through to consumers, and it's generally going to hurt the consumer in general. So, while regulation's good in theory, it always brings about these unintended consequences. All right, now Obama's going to be at the G20 this weekend trying to convince everybody else that they need financial regulation as well so that we don't lose our competitive advantage. Well, guess what? It is having less regulation is a competitive advantage, and countries around the globe, they need business to come to their country so that they'll pay taxes and help finance their debts. And we have a huge debt crisis here, and if we're doing things that are deemed anti-business, whether they are or not, it doesn't really matter. If somebody thinks that it's anti-business, they're going to take their business elsewhere, and that's what we're seeing. So, that's financial regulation. Okay, this is out of the way. The president's expected to sign it next week, but the big news next week is going to be the non-farm payrolls report and the jobs number. All right, we saw a very disappointing jobs number last month because there was no growth or very little growth in private sector jobs. If this is the case again, look out below. So there's going to be G20 meeting this weekend. I don't expect anything significant to come out of it. No one's going to change their stance overnight. If anything, I hope that what's being enacted in UK and Europe is actually taken to heart by the US, because spend, extend, and pretend is not a way to get the economy moving. So that's what we've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.